Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, May 13th, 2010. This morning we're talking about whether to expand or contract. And what we're talking about is government debt levels here. Now many countries and economies around the globe, they're facing record budget deficits. Like here in the US, we're talking about the UK. We all know about the budget deficits in some of the countries in the Eurozone, namely Greece, Spain, and the like, the other pigs. And then of course there's always Japan, which I mean it's so large there nobody even really talks about it anymore. But there's a couple ways that people are going about trying to combat the economic crisis. And this just is happening over in the UK right now, where this new coalition government's wasting no time proposing ways to slash the budget. And in doing so, they've actually gotten the approval of the Bank of England's head governor Mervyn King. So they're all sort of in bed together saying this is a good idea to reduce deficits. All right, but what you have to realize is that when you reduce deficits, that means you're reducing fiscal policy, which means that you need to be more accommodative with monetary policy. Now, basically what that means is that you got to keep rates low, you got to make more money available, you may potentially have to do some quantitative easing, namely bond buying. And that's what's going on in the with the British pound. So as you can see here, the pound is down. Let's just take a quick peek on the chart. We're looking at the 4-hour chart. This is pound dollar, and as you can see here, right as it got just breached the 150 level the other day. Wow, nice little stochastic crossover for folks trading off the 4-hour charts. This is a pretty nice little move here. We could see a retest of 145 in the next couple of sessions. So that's what's happening with the pound, and same deal's happening over in the Eurozone. We're talking about the austerity measures that are being imposed upon Greece and Spain and all these other places. Now Ireland's already set up their own austerity measures. It's funny, but my countrymen, the joke is that they've always been used to being poor, so this is no different. But we talk about what's going on in Greece, the riots, what have you. Just to note is that the unemployment rate in Greece really isn't that much higher than here in the U.S. So they've got a lot of benefits. They've done a lot of things over there, which probably don't make a lot of fiscal sense. And I think that they're going to come around, but we'll see. I mean, that's the big bet in the market right now and what's happening. Spain just announced budget cuts yesterday. They've got much higher unemployment than Greece, so they're a potentially bigger problem, as they are also a larger economy. But there's a lot of talk out here. Well, the euro's going down because people are afraid that the bailout's not big enough. Well, you got to remember that they set aside basically $1 trillion to say, okay, we're going to help these countries out if they need be. But it's not like everyone's coming running to the door saying, we got to pay off our debts in full today and we need all this money. No, all this is doing is it's sort of similar to Treasury Secretary Paulson's bazooka, when he basically said we're going to handle anything and we have all this money and that's it. What this does is this helps reduce their borrowing costs, so that now maybe not the first time around when they have to do their bond rollover, say in mid-May, but the next, or coming up soon I think, but the next time that they come out, they can go into the market and they can get a reasonable rate of interest, and they can start to performing better in the market, which is going to bring confidence. And then, if they do actually stick with some of these austerity measures, that's only going to be a good thing, because it's going to help them reduce the deficit. And, the sooner they can do that, the quicker they can move on to, better things with their economy. So, that's the big bet right now. But at this point, it's way too early to tell if these austerity measures are going to work. And in the meantime, I think we're just going to see a lower pound and a lower euro, which, these guys aren't that adverse to it. It's going to help their exports, especially in the UK. Germany is going to be helped out, and they were, most adverse to this whole thing to begin with, but I think they're going to end up being the beneficiary in the end, as always. So that's what's happening. Some of the other things we're seeing here, real quick, just want to show you the Aussie USD. It's hanging in there today despite the risk aversion in the market. Employment gains came in better than expected, 33.7 thousand gains versus the expectation of 22,500. Let's take a quick look at the euro here, trading a 125 handle. As you can see, getting near that low of 125.10 that we saw on the flash crash last Thursday. So I think we're going to see lower euro. Euro came into existence at about 118, I believe. I'll have to double check that. I shouldn't just be firing out those numbers, but I'm pretty sure it was 118. 2018, and we could see that pretty soon. So. That's going to only help them. Their tourism is going to pick up, as I mentioned. It's going to help their manufacturing, so on and so forth. Some other things happening. Dollar. We had the initial jobless claims came in a little bit worse than expected, but not a big deal at this point. Bernanke's going to be speaking at 2:30 Eastern Standard Time, so if you're trading around then, just kind of be wary. If you see any wacky market movements, he could be saying something dumb. So that's what we're seeing here. It's going to be interesting to see whether or not, when these guys go into these economic contractions and try and cut spending and cut their deficits, whether or not they can avoid the double dip recession. That's the big worry. But I think if they do have accommodative monetary policy, they're going to make it through just fine. So that's what we've got for today. Keep your eyes on the pound and the euro, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.